Warren Buffett, one of the greatest investors of all time, he says, you never know who is swimming naked until the tide goes out. And I think that's exactly what we saw with Silicon Valley Bank and several others. This bank dealt exclusively with venture capital firms and startups. That was their client base. And during the pandemic tech boom, their deposits grew to $200 billion. So what they did with that money is they bought what were perceived to be seemingly safe assets. They bought longer dated US Treasury bonds, and they bought mortgage-backed securities with government guarantees on them for about $128 billion worth. What happened, Aoife, was that due to the aggressive, nonstop tightening by the Federal Reserve, that portfolio of bonds took an unrealized loss down from par value of about $17 billion. That was largely caused by the Fed. And what happened was, as the tech boom of the pandemic slowed down as well, clients burned through some of their cash and deposits, so they were drawing down their deposits, and it was harder for them to raise cash through public offerings or through VC firms. So not only did you have a hole in the bond portfolio, temporary impairment, but also you had the deposit base going down. And to solve that problem, their deposits had gone from about $200 billion at the peak to about $173 billion by the end of last year. To solve the problem, management sold a large chunk of its securities, about $21 billion at a loss of $1.8 billion. They were trying to lock in higher yields and create the balance sheet flexibility to meet potential outflows and still fund new loans. And it wanted to do at the same time a $2.25 billion equity raise, but they kind of fumbled the ball. And when people heard about it, you saw a massive withdrawal of deposits, because most of the deposits were large institutions versus individual depositors. So the money flew out just as quickly as it flew in. Couple that with a short-term impairment in the bond portfolio, and that's why you saw what you saw. So, this is not exclusive to Silicon Valley Bank in the sense that there are $620 billion of unrealized losses across regional banks. However, the Fed did step in and said, listen, we understand if you own government securities that eventually they're going to realize at par over time. We will allow you for a period of 1 year to borrow against the full value of your bond portfolio, provided they're in government securities and government-backed securities. So that alleviated things. What they have to worry about now is keeping the deposit base in the banks, because on the one hand, if you solve the balance sheet issue, that's a good thing. But the key is to keep the depositors in. And now you have banks competing with the US Treasury, with the high yields on the short-term bonds, to have to pay more money to keep the depositors in, which hurts their income, which is part of the reason you saw Silicon Valley Bank further out on the curve than most people thought they should be. Because if you think back a year and a half ago, there was no yield to be had. So in order to get any income for their shareholders, they had to be further out on the risk curve, which was the design of the Fed initially to keep rates so low. And that caused this problem. So I would say, number one, they could have managed their portfolio a little bit better on the short end, or as they saw rates going up, start to move to the shorter end of the curve. But this was largely created by the Fed. It's almost like an insurance company. Yeah. You pay them insurance to insure your house, and then all of a sudden they set your house on fire and they say, what did you do? But I think the Fed played a big role in this.
Okay, it's quite chaos from the depositors' perspective, and it's we were worried that it's quite contagious, of course. But saya akan ke Pak Joshua berikutnya. Pak Joshua, Anda sendiri melihat ya begitu kondisi yang terjadi di Amerika Serikat, SVB, kita lihat di market kita hari ini, bahkan koreksi juga cukup dalam, tidak hanya di Amerika Serikat tapi juga di Asia. Artinya betul-betul respon dari para pelaku pasar ini juga cukup kuat begitu terhadap apa yang terjadi di SVB. Tapi mungkin bisa digambarkan Pak Joshua begitu, kira-kira seperti apa sebetulnya dampak dari SVB ini sendiri bisa betul-betul dirasakan oleh Asia ataupun juga oleh Indonesia, Pak Joshua?
Iya, Iva, terima kasih. Jadi kalau kita lihat dari sisi dampak langsungnya, sebenarnya apa yang terjadi di SVB sebenarnya dampaknya kepada khususnya sektor perbankan Indonesia relatif tidak ada dampak langsung. Dan kalau kita lihat kenapa? Karena kalau kita melihat dari beberapa perbankan, sebagian besar perbankan di Indonesia ini tidak memiliki hubungan bisnis ataupun facility line ya, ataupun investasi pada produk-produk sekuritisasi SPB. Dan selain itu juga kalau kita lihat bank-bank di Indonesia ini tidak memberikan kredit dan investasi kepada teknologi startups ya maupun kripto. Jadi artinya dari sisi portfolio fundingnya pun juga tadi seperti disampaikan oleh Tom bahwa sebagian besar didominasi oleh VC ataupun venture capital, artinya korporasi yang artinya tidak terlalu terkonsentrasi ya pada saat tadi terjadi penarikan sehingga likuiditas dari perbankan dari bank SBB tersebut juga berkurang sehingga dia harus unrealized loss tadi itu akhirnya menjadi realized ya sehingga itu menjadi penyebabkan SBB akhirnya dan juga signature bank juga akhirnya ditutup. Tapi dampaknya kepada Indonesia saya pikir mestinya tidak ada dampak langsung. Yang mungkin kita bisa cermati di hari ini mengapa IHSG sampai melemah kurang lebih 2% hari ini dan ini koreksinya dipimpin oleh pelemahan dari saham-saham teknologi. Saya pikir tadi masih berkaitan dengan bagaimana nanti apakah dampaknya ini bisa merembet kepada pendanaan startup di Indonesia misalkan seperti itu dan bisa kami sampaikan bahwa dampaknya kemungkinan besar adalah relatif tidak akan sama halnya dengan seperti yang terjadi di SVB dan kemarin juga kita melihat bahwa ada tadi juga disampaikan bahwa sudah ada langkah-langkah penyelamatan dari regulator keuangan di Amerika Serikat sehingga harapannya ini memberikan dampak terbatas ya kepada pasar keuangan kita meskipun memang hari ini mungkin juga selain tadi masih SVB market juga masih menantikan rilis data US inflation yang hari ini akan dirilis karena ini akan sangat menentukan bagaimana arah suku bunga Fed di FMC bulan ini dan juga bulan Mei mendatang.
Oke, baik. Artinya menurut Anda, Pak Joshua, kalau dampak langsung sendiri mungkin nyaris tidak ada begitu, tapi di satu sisi juga mungkin dampaknya lebih ke dari efek yang terjadi dari SVB ini akan berpengaruh kepada sikap The Fed, sehingga akhirnya akan berpengaruh juga kepada rupiah dan juga baru pasar keuangan di dalam negeri tentunya ya, Pak Joshua. Oke, so moving forward to Thomas, so from your explanation earlier, so how contagious is these cases to the banking industry in the United States, and from your 2 cents, from your point of view, how is the impact to the other countries, especially Indonesia?
Yeah, well, I think the contagion is going to be contained, and that's because the Fed stepped in relatively quickly. They probably waited a day too long, but for 2 factors. Number one, the banks can borrow against the par value of their portfolio. So the impact of the unrealized losses will be less severe. That's a good thing. Number 2, they also stepped in to guarantee depositors' deposits, which is critical for Silicon Valley Bank and for a couple of the other banks. What they need to do is come up with some program that says all deposits are guaranteed in the United States. Otherwise, what you're going to see is all of the deposits go to just the 4 big systemically important banks like JP Morgan, Citi, Wells Fargo, Bank of America, et cetera. And you don't want to see that because if all the deposits leave the regional banks and just go into those 4 big banks, you really do have a situation of too big to fail. So hopefully they'll come up with some program where everyone feels confident, whether they're a business with a large account or an individual with a smaller account, that if they put money into a bank, their deposits are safe. And once they do that, the contagion will stop. They haven't done it yet, but it's implicit in the fact that they stood behind Silicon Valley Bank and Signature Bank, that they'll do it for other banks. As it relates to opportunities in Indonesia, in emerging markets, I think this is very, very positive for emerging markets for a couple of reasons. Number one is it's going to cause the Fed to stop doing what they did to break the system. So the Fed often tightens until they break things. We saw Silicon Valley Bank was a broken thing. So likely, at the most, they're going to do one more 25 basis point hike. We think they may do 0. And if they do 0, you're going to see bonds continue to get bid. Yields are going to come down. The dollar is going to be weaker. And that's a very, very positive thing.
Okay, so you agree with Goldman Sachs, Thomas?
Yes.